It's so good to have you with us today. I have the distinct pleasure of having with me one of my dear friends and a member of our board of advisors, Stacey Udell. Stacey is a partner in HBK Accounting, and she is in charge of the Valuation Group. And she's also the author of the book, Accounting and Appraisal Guide for the Cannabis Industry. And we're now looking at the second edition. So I thought it'd be appropriate to have Stacey on because we get so many questions all the time, especially in new states like New Jersey, New York, that are starting to come online. People are starting to invest money. A lot of people don't have experience with cannabis are starting to invest money. They don't understand the laws and the tax accounting rules specifically around cannabis. So there's no better person out there than Stacey to help us understand the specific rules around taxation and around some of the issues you'll have with starting your cannabis business. Stacey, thank you for joining us today and welcome to our show.
Always good to see you, Dan.
Always great to see you. Please hold up your book. I'm so proud of this. This was the first one was just chock full of information. The second edition, I can't wait to get my autographed copy. It's dry because it's accounting, but it's really necessary stuff. It's hard to make accounting colorful, but we're going to try today, aren't we, Stacey?
And it's not that bad. It's a light read.
It's a very light read, and if I could get through it, anybody can. Trust me, because I am off the charts, not able to focus on that stuff. So it really has been helpful for me. But it really comes down to a specific rule in accounting called 280E. And many people aren't familiar with 280E, but help us understand the implications, the issues for accounting in cannabis around 280E. Stacey?
Absolutely. So 280E is in existence because cannabis is a Schedule I drug. And what it says is that you can only deduct the cost of sales. So normal operating expenses that are deducted by your business and any other business are not deductible for cannabis businesses. And what happens is then if you think of a dispensary can only deduct the costs of its product. So it can't deduct the costs of those who are selling the product. It can't deduct the rent, the telephone, utilities, insurance, all those things are not deductible for tax purposes. So you end up with an extremely high effective tax rate. For cultivators and manufacturers and other businesses, you can bake a little bit more, and I don't, no pun intended, bake a little more into the cost of goods sold because you can allocate, some of the salaries and things like that to the products, because the idea is you have to get to the cost to make that product. So it's not quite as bad, but you're still losing a lot of deductions. And that's just something that unfortunately doesn't seem to be going away right now. But, if you plan in advance for it, there are methods to increase your cost of sales and, legitimately, because, anything I say is, follows the rules, but there are ways to do it. It's just you have to be a little bit proactive with it.
Right. And when will 280E go away? Is that when it becomes descheduled, and is that's different than safe banking, correct?
Correct. It's when it becomes descheduled, or when there's legislation passes that says it's not applicable anymore. But odds are it'll be part of some mass legislation having to that has to do with safe banking, also probably has to do with the descheduling. But at first I was hopeful that next year would be the year, but then I read something, saw a headline yesterday that it's probably not going to happen. So we don't know. I mean, a lot of us they have said 2 to 3 years for the past 5 years.
Yeah, well, nobody's made any money predicting when this is going to happen.
No.
So let's say I'm a new dispensary or a new grow or a vertical operator in New Jersey. And obviously, every new business incurs losses because you don't start to create revenue, especially in cannabis, until you have a grow that produces product and you can get it into shelves and sell it and start to create revenue. So it's very common and not unusual for most businesses to lose money. How do you handle those losses in the cannabis business? Help us understand that.
Okay. Well, it's a complicated question because it varies depending on what type of entity you are. Mm-hmm. So if you are a partnership or a sole proprietorship, you don't have to file tax returns until you have income or let's say revenue. With a corporation or an S corporation, you have to file even though you might not have revenue. You're still going to report the expenses. You just can't necessarily deduct them yet, because you can't deduct expenses until you're generating income. So you still need to accumulate them and keep track of them. You just might not get a deduction for it right away. So, it's still important to keep good records as if you were going to be reporting your income, but you're not going to necessarily report it for, generally I'd say it could be, it's 6 months, 18 months to, in Jersey, we had people that applied in 2019, thought they'd be operating, by 2020, and now hopefully in 2023 they'll be operating. So right. You don't know.
You never. That's part of the. Legalization in nascent industry. I think every single timeline out there is off the charts, and that really is. One of the things we're talking about is the considerations when you are pre-revenue, because pre-revenue can drag on, as you pointed out, sometimes for years. And so what other considerations do we need to think about other than timelines and the cost incurrent in timelines from a tax perspective?
Well, you have to, like I said, you're going to have to keep track of everything. You also have to know what taxes are going to be required, because each state has different taxes. Alabama has a cannabis excise tax. It has an income tax, cannabis income tax. There's local taxes, there's state taxes. So there's a lot of different taxes, and you have to know what you need to register for. Then you have a state, like New Jersey, and there can be a local tax. There's the state income tax. There's a state sales tax for adult use, but not for medical use. Some states there is a tax for medical use. So you have to know your requirements and whether, your jurisdiction has requirements and what they are. Do you have to file monthly? Do you have to file quarterly, annually? So there's so many different requirements that are different by state. So you need to really know what your state requires and what the applicable taxes are, because you want to be in compliance, because it's such a high risk industry. Odds are you will be audited once, things settle down, because right now nobody has time to think about it, but you are going to be audited someday. So you need to make sure you're in compliance, right from the beginning, and, know whether, like for New Jersey, for example, we get a lot of people that get notices that they haven't filed sales tax. Well, it's because they're not operating yet, and they didn't need to register for sales tax, but when they signed up, when they registered their business, they accidentally signed up for it. Right. So New Jersey then requires you to file the returns, even if they're zeros. But you can also but what we've been doing is we've been going back and calling the state and saying, okay, can you unregister us for sales tax until we're ready to operate, and then we'll re-register. So then you don't have that filing requirement.
Yeah, the filing requirement and the filing cost.
Yes.
So, sorry, Stacey, I know that's mostly your fees, but but the right professional, that's what the good professionals do.
Right. And you know what? We always talk to the client, and I try to service their needs. If they want us to do everything, we can. If they want to do, if they want to take over, we explain to them how to do it so they can do it. I don't need to do everything for them. I just want to be there to help them so that they can succeed. So we literally, we have team members that just walk clients through how to do stuff so they can learn themselves how to do it from somebody that's done it before, because it's obviously easier to learn from somebody else than to just read online and try to figure it out.
That's one of the things we've learned is there's a lot of nuances, sometimes ambiguities in laws. In our space, for example, there's ambiguity in terms of registering our call center agents in Florida with the state of Florida.
Right.
They register with us, or do they register with our client? And nobody ever anticipated outsourcing when they wrote the Florida law, so nobody could really figure it out. And so we erred on this side of caution. We decided to do it the conservative way. Because again, we know this industry is under scrutiny. We know the compliance issues are complex, and everybody's looking at it. It shocked me when I went to Denver for the very first time when they wouldn't let me into the dispensary because my license was missing a corner of it because I've taken it out of my wallet so often to go through.
Oh my gosh!
And I had to go get my passport from my briefcase because they wouldn't let me in. It's like, wow, these people are serious about compliance, and I like that. That's wonderful.
Right.
That's what, as an industry, that's what we should aspire for. So speaking of compliance, one of the things you think about, one of the things I hear all the time is, so if the tax considerations are complicated and 280E makes it complicated, can I have another entity that can write off those costs? Can you help me understand from a compliance perspective, if you can do that, or other workarounds out there that are actually in compliance?
Right. So that, there's been court cases on that in the past. And basically the answer is you can't just create an entity to avoid taxes. You can't just create a management company or a holding company and have them pay expenses for your cannabis business and expect them to be deductible under that holding company, because the IRS looks at that as tax evasion. And unless there's a good business purpose for, having a management company or a holding company or whatever it is, you can't just move the expenses to make them deductible. The other entity basically has to be able to stand on its own and generate its own income in order for the IRS to recognize it as, a tax-paying entity.
Got it. Well, okay, it makes sense. I mean, it's just like, in other words, if your intent is to defraud the IRS, you're probably going to get in trouble.
Yes, I would say. Yeah, and there are good reasons to do, for certain transactions. I mean, there's a good reason to have a real estate entity separate from an operating entity, but you have to charge the appropriate rent. You can't just move things over, because if the IRS smells something not right, they're going to come after you.
They're going to dig. Let's talk about my favorite subject, because I think that's really where you shine and where I think the industry needs help of people like you, is valuation. And, what are the considerations, because it's one of those things that we think about in business all the time is how do you value my business? In cannabis, it's harder because it's a brand new business, and obviously the market's way down. So the only way to measure the value of a business in many ways is to look at what the market's doing. But eventually the market will come back. Eventually there will be those businesses that will be acquired at high valuations. Those will be acquired at low valuations, and those will not be acquired, and those that will go out of business. And that's kind of like the categories of what's going to happen in cannabis. That's with every nascent industry. So if I'm an operator, either an MSO or a dispensary or a grow, what are the considerations that I really need to focus on? What are my top 5 areas that you think I should focus on to help drive valuations?
Right. So, everybody always says, what's the rule of thumb? And there is none, because, if there isn't a good one, let's put it that way, because if I have a business and I'm starting a business in Georgia, that's different than New Jersey, because you've got a medical market. We have an adult use market. So it's not the same. If you have a limited license state versus an unlimited license state, that's going to make a difference. If you have a dispensary in a town where you're one dispensary in 5 miles, that's different than there's 5 dispensaries in 1 block. All that comes into play. And, how many licenses, if you have a limited license state, how many licenses is the state allowing, is the state going to allow? It's interesting because, from Jersey, and in New Jersey, after February, it's going to be unlimited licenses. And so it sounds like, oh, that's so easy to get a license anywhere. But the problem is you have so few jurisdictions that have opted in to allow licenses. So it's not really unlimited, but from the state level it is, but it's not really unlimited, because you are limited to what the jurisdiction allows. Some jurisdictions have a limit to the number of licenses they might allow, or to the type of licenses. Some say retail only, some say not retail, some say you can have 5, some say you're limited to 1. So all that comes into effect.
In New Jersey, being New Jersey, watching the shuffling going on in the politics and interaction with business ought to be interesting over the next few years.
Right. And it makes a difference if you're in a state, when if Florida legalizes before Georgia, people are going to go to, people that are on the border of Georgia and Florida, people that at the Florida border, they're going to get people from Georgia that are going to come in, and so all that stuff makes it, is going to make a difference, in the near term because of all the regulations. So, basically, in order to increase value, you've got to get your brand out there, be knowable, have a good reputation, keep your costs down, because really, the amount of money that MSOs are paying to get into these states is ridiculous. It's not what I would call fair market. It's not a market value. It's strategic value. It's I'm willing to pay 5 times more than it's worth because I want to get into that state.
I want to be early. So yeah.
Yes.
So it's reminiscent of some of the bubbles we've experienced in the economy with the .com early on, or the early technology bubble when AOL was the darling and prodigy.
Yeah, it's all emotional. Cannabis is very much an emotional investment nowadays.
Right. So it's hard to justify valuations from an accounting perspective.
It is, and you're seeing Viridian has this deal tracker, which you just get emails each week with what multiples are being paid, and they are seeing them go down. And there's also going to be more debt. Hopefully soon there's going to be more. You mentioned safe banking. Hopefully there'll be options for lending soon. So that's going to affect all of this, all of the valuations too, when there's more funds available for people.
There's lending available now. It's just extraordinarily expensive because the lenders available are charging double-digit rates because there's no other choices out there. It's a great secured debt in cannabis is a fabulous market to be in because you're not going to get better returns on investment. So.
Right. And it's interesting because there are, a lot of states have rules that say, you can't use the license as collateral, for example. In some states you can, some you can't. But there are certain lenders out there now that are, allowing the licenses to be used as collateral. Right. There's a lot more that say, no, we'll only, lend on the equipment or the real estate or things like that. And I get it. I mean, a lot of businesses are going to fail, unfortunately. And that's, that's one of my problems with unlimited license states, in a way, is if everybody can open, there's going to be people that open these businesses and unfortunately don't know what they're doing and fail and then lose their life savings, and I don't want to see that.
My bigger fear is what it does to the industry.
Right.
It cripples the industry. Look at Oklahoma and the pain that they're experiencing right now with unlimited licenses.
Yep.
It's just not economically viable. So what happens is they start to take that product and ship it to illegal states, which is what happened in California. So it cripples the industry's long-term growth.
Right.
When you're talking through 280E and you're talking through safe banking and descheduling, the changes to the industry are going to be dramatic and instant because the cost basis of being in the industry will drop dramatically overnight. Mm-hmm. And the people that can make it to that finish line, because I think that is a finish line in this nascent industry, I think we'll have a better chance of succeeding. So it's going to take a lot of resourcefulness. It's going to take a lot of tenacity. It's going to take a lot of creativity to survive until then. But we don't know if it's going to be 6 months, a year, or 5 years until it happens.
No, we have no idea. If we did have an idea, we wouldn't be sitting here having this conversation.
Right. We'd be figuring out where our next investments were going to be.
Yeah. Yeah. No, we don't know. I mean, but all you can do is get the right people on board. I think it's an industry where there's a lot of, there's a lot of friendly competition in new markets because everybody wants everybody else to succeed, which is great.
Well, I think it's also one of the things that people confuse uncertainty with compliance. Because it's an uncertain industry, do I really need to spend that kind of money and effort on compliance? And I think the resounding answer, I'm sure, is of course you do, because you can't even get to the starting line if you're shut down for compliance violations.
Right. No, absolutely.
Now, I think that's one of the things that people forget about. Oh, well, it's a nascent industry. Nobody's watching. It's like quite the opposite. Quite the opposite. I think the regulators are watching even harder because it is a nascent industry, and they want to figure out, what matters and what doesn't. And so
and what they do is, they, like in the application process, a lot of the times they're not necessarily, they require standard operating procedures, but they're not the ones that are going to be for operating. They're, can you follow directions, SOPs?
Right. Yeah. Yes. It's the entry ticket, as I say.
Yeah.
Be able to Well, Stacey, this is great. We've made it colorful. We've made it exciting. We've made accounting and valuation interesting, I think. It's always great to talk to you. That's why I love talking to you, because it can be dry subject matter, but it is so vitally important in the ultimate outcome of what you're trying to do with your business. And there couldn't be a better partner to help advise and work with you if you're a nascent business than Stacey Udell and her team at HBK. And we're honored to have you on our board, Stacey, and I always love chatting with you. Thanks for joining us today.
Thanks for having me, Dan. I love talking to you too.
Great seeing you. Take care.
Bye-bye.